Hello and welcome to another episode of FinTech Focus TV with me, Toby Babb. There is a delightful returner to the show. I think it's Mark, you were the only person I think who's been in it every single year since 2020. So it's always a pleasure to have you back on the show. Ladies and gentlemen, Mark Beeston of Illuminate Financial. How are you?
I'm very good. Thank you. Thank you for having me back. One day you'll get something sensible out of me.
I love this. I mean, when you're talking about that, I was thinking about it on my walk in this morning to work, and I was thinking about the sound bites going all the way back to, if you remember 2020, you were talking about cloud adoption and everything like that, and this being the petrol on the bonfire. I think COVID was the petrol on the bonfire of cloud adoption in the
Yeah.
financial markets. That was the first one you gave me last year, and we're going to talk about this a lot. It was the venture winter to venture spring that I found myself parroting back at various stages last year. So I'm waiting for that sort of drop moment that you give me every single year to do this, and it is always a great pleasure because. Look, I've known you a long time. I think there's some interest. You've got a fantastic overview of the market and the industry that we work in, and it's always interesting just to see what's happening in the space from your privileged viewpoint. I think you have a really good oversight of what's happening in the marketplace and where it goes and what you guys are doing. And Illuminate just goes from strength to strength. So some people out there might not have seen our last couple of conversations. So for those who haven't, who've been hiding away, just give us a brief overview of Mark Beeston and Illuminate Financial.
I'll do that, but I got it to stop myself smiling before we start. When you say venture winter to venture spring, I'm in Manhattan today and I'm looking out the window and I got the subway to World Trade this morning. It's 5 blocks from our office. By the time I got to our office, it's very definitely, this was very wintry this morning, that's for sure. This is being filmed right after the big blizzard of 2026, for the record. So
Well, we've got another one coming up on Sunday, just as I fly in, I hear. So
you're
I
going to
was
be
looking behind
fine.
you and being very hopeful as I see you in a polo shirt with bright sunshine behind. And now I'm thinking, oh God, what am I? Hopefully I'll
Yeah.
be out there. So I may well bump into you
Well,
next
you
week.
know
But
what? It might be bright sunshine, but it was 5 Fahrenheit when I left my house this morning.
is
So
that right?
have that in mind.
Wrap
Anyway,
up warm.
so I think there was a question in there, right?
There was somewhere.
Introduce Illuminate and introduce myself, right? So Illuminate Financial Management, business that I set up 12 years ago, that was basically set up as a venture capital business to focus on institutional financial services technology. I have a capital markets background myself, having spent 13 years at Deutsche Bank on the fixed income derivative trading side, senior COO roles there, which was my first exposure to financial technology through the consortia board seats that you end up sat on. Left Deutsche, joined the exco of an interdealer broker called Creditex at the same time that TA Associates invested in them, becoming my first exposure to the financial sponsor side of FinTech. Built a post-trade processing business for them, learned a few lessons, which we've really replicated in the Illuminate model. And when we sold that business to Intercontinental Exchange in '09, I then went to ICAP, where I was also on the Exco and ran the post-trade and information services business, which was about 35% of the bottom line, set up their venture capital business and left in 2014 to set up Illuminate. As we sit here today, Illuminate is about 24 people around the globe, run by my partners. All the partners here, there's 5 of us, have worked together now for over 10 years. So we are partner-led out of our London headquarters, New York, which is a major deal center and relationship center for us, and Singapore. Our model is very much to partner with the industry. We have a dozen what we call strategic LPs, some of the largest exchange groups in the world, some of the largest investment banks in the world, or banks in the world, and others. And we have 4 funds, 3 Series A focused ventures funds, and launched our first Series B focused fund towards the latter half of 2024, and are deploying across that. So I guess that's the rapid version.
That's the elevator pitch. And as I said, there's been a number of different successes. I mentioned that there's been a lot of news around Illuminate. It seems to be constantly on my feed over the last year or so. 7 exits, I believe, last year out the portfolio.
Remarkably, yes. Remarkably, yes. Yeah. I think we've made 52, maybe 53 investments now, and we've
Yeah,
exited 13 of them.
fantastic.
Yeah.
So good. So yeah, and look, I've said it to you before, and without wishing to be sycophantic, I think it's a there's not very many misses that come into this, and in a world where there is an awful lot of those coming through, I think something which I get, and obviously I speak to a lot of the companies who are in the portfolio. I feel like there's a real equity and belief and shared values in terms of what you're doing with the companies that you generally tend to work for. I think I saw numbers about the number of different companies you've looked at over the years, which scans into the thousands, doesn't it? So
It's
when you're
over
talking about
10,000 at this
yeah,
point.
it's phenomenal numbers, and when you're talking about sort of 53 of those, there's obviously a bit of um, due diligence that goes into making sure they're the right ones, and that seems to be playing out very nicely for you and them at the moment.
We're always in the business of not signing the Beatles, right? Like, just because we choose 53 from 10,000 doesn't always mean they're the right 53. As long as more of them are right than wrong, then I think we end up in good shape.
Absolutely right. Absolutely right. So let's shoot back to that sort of comment that you made last year, my sort of hang on to line from it all of venture winter to venture spring. Fast forward, 12 months from when that statement was made, it feels like the market is recovering, slightly from everything that I'm seeing. There's a little bit more confidence, even if there is, volatility on a macro level that continues to stay. That's the constant over the last 5-6 years, isn't it? So
Yeah.
it feels to me that people are sort of adapting to that, understanding that, and sort of realizing there's a necessity to press on. We've seen interest rates drop a little bit, more confidence coming back into the marketplace. But are we spring, winter, summer? Where are we at season wise in your eyes?
Again, looks out the window. I think in venture terms, it is definitely the later part of spring.
Hmm.
Right. But I think, I was down in Florida with my wife this weekend, and we're talking about the weather, right? It was cold in Florida, right? But it was like at its coldest, it got to freezing,
Yeah.
right? Like here this morning, it's 5 degrees Fahrenheit. Right? I can't even imagine what that is in Celsius, right?
Yeah, yeah, yeah.
And so, both of which are East Coast, and it's like, it's like a 2.5 hour flight difference, right? And I use that as an example because I do think that your perception of how wintry it is really depends on your vantage point,
Yeah.
right? So, we can definitely talk about some of the bigger themes that are going on with the industry, but yeah, so let's start with our vantage point, right? As you were kind enough to mention, 7 exits in 2025. I would approximately describe that as in reality 4 successful exits, and 2 material exits. We've added some, great new logos to our, long list of acquirers. I think I mentioned, we've sold 13 out of 52 businesses. Our first fund remains Europe's number one 2015 vintage fund for what we've distributed to our investors, and has been for, I think, getting on for 4 years now, according to
Brilliant.
Cambridge. Um, you know, but so yeah, we've added, I think we sold AxLX, got acquired by Carter last year. Fortify got acquired by Paxos. Um, Steeleye got merged into Fund Apps, which themselves had just been acquired by FTV. And actually, we should talk about that as well, because I think that's a structural change in terms of who the acquirers are going to be during this next phase, particularly in the
Mm,
institutional space in which we operate. And then we did a bit, then we did a substantial secondary when Citadel invested in Transfic at the start of last year. So,
yeah, yeah.
um, so we've seen liquidity, which is great. That's definitely a sign of venture spring. Um, like there's a lot of people still struggling for liquidity. The IPO windows have not been consistently open, as we've discussed many times. The
Yeah, absolutely.
news is our model is not contingent on the IPO window being open. And then I think the other sign of spring is, again, just the amount of capital that is starting to flow into, back into venture, right? But this is where I think that perspective thing really makes a difference, right? So we've seen huge amounts of capital getting deployed, biggest amounts of capital deployed in 2025 since the sort of the bubble-esque market of 21, 22. So
122, yeah.
$500 billion deployed by VC, right? But the concentration of it is I think unprecedented, right? 30% of VC capital in the third quarter of last year, right, was deployed in mega rounds. Right? You're going to hear mega around VC all the time now, right?
Yeah,
Mega round, a round that's over $500 million, right? 18 companies capture a third of VC funding, right? Like, this is gobsmacking.
it is, isn't it?
Essentially, venture capital was always supposed to be non-correlated capital, right? And what we're seeing is that actually there's this huge capital concentration, both of money flowing into the biggest funds and then money flowing out of the biggest funds into the biggest private companies. And we'll talk about AI and whatever, no doubt.
Mm.
But 50% of total VC funding in 2025 went into AI companies, right?
Yeah,
That is staggering, right?
yeah, yeah.
30 VC firms themselves captured 75% of all fundraising, right? So that's the managers, right? I think A16Z was 20%, right?
Mm.
9 firms captured half of total funds raised. Right?
It's just extraordinary. I mean, you told me this before we came on air, and the numbers just don't get any more staggering, do they? When you think about it, when you keep hearing
Yeah.
it.
So the deployments at a record high, or close to record high, barring 21, 22. It's getting deployed in a more concentrated way into less companies. Fundraising is nowhere near a record high, right? LPs are still cautious because they haven't had enough liquidity out. But where they are deploying, it's going into all of the same funds, right? And so what you've got is mega funds and mega deals. And make equity great again, I guess, is the that's not a
There we
that's
go.
not a soundbite. It's not a
Oh, it's
soundbite.
too late. It's written.
Oh no. Um, so I think that's a real challenge, because what's happening is, in the world of venture, you're either a mega fund, right? In which case, you're just like a black hole that's just sucking in the capital, right?
Mm,
Or you're a small, alpha-driven specialist,
mm,
right? Right? Or you're stuck somewhere in the middle, right?
mm, mm.
And I think stuck somewhere in the middle right now is a horribly painful place to be, right?
Mm.
Now, I think, for better or worse, we're stuck somewhere in in that, we definitely have an alpha driven strategy,
Yeah.
our industry network, like taking the guesswork out of what we're doing, right? That has always been the core of what we do. So I think we're in that bucket. But on a fundraising journey, it's really hard out there, right?
Mm, mm.
And, you know, our model is you can see it in the distributions in the first fund, which is hit maturity, right? Very, very excited about what we've got stored up in the digital asset space in fund two, and there's a lot of true power law distribution stuff waiting to happen in ventures three, our two sort of mentioning two of the three Series A funds, um, but uh, but I've got 24 people, right? I
Mm.
could easily, we could easily be managing 4 or 5 times the capital, like, without significantly increasing the deal team, because the team is so large, because we engage with the street so much. right?
Of course, yeah,
But actually making that breakthrough is probably as hard as it's ever been,
yeah.
right? So, I think, I don't know if it is one of the sound bites you use, but certainly one of the things that I've written blogs about before is, I'm not just a VC, I'm an entrepreneur too, right?
Mm, mm.
You know, we're all out, I founded this business from zero. I didn't drop into somebody's franchise. I was very lucky to be joined by some brilliant people along the way, and they've, really, we've built it together, and that's phenomenal. But every day we're living the reality of the entrepreneurial challenges, the people we invest in, right?
Yeah,
Like
yeah.
we break through to the next level, right?
And I
Uh,
wonder if that's what, coming back to what I said at the start about, the sort of success of the investments and the relationships and the feedback that I get from the other side of it all. There's no one who's had a bad word to say of all the companies that I've known who are doing it. And there's, quite the reverse. There's some, tremendous sort of feedback and testimonials that are given to me by people who've been part of this journey with you. And maybe that's because it is that same sort of thing. It's not like a faceless organization when you talk about that. There is that entrepreneurial thing of understanding the challenges and working together from it, particularly when you're talking about that sort of niche driven area that you're not here, there, and everywhere around it. It's been very deliberate as a strategy in the areas that you know about as well.
yeah, look, I mean, I think, it's great to hear that. It's always great to get positive feedback third hand because, it's probably,
Yeah, yeah, exactly. The
it's
jungle
very
drum.
different to going out and asking for it.
Yeah,
Uh,
I'm not the shoe shine guy in the streets of New York. There, he knows the information. Just
exactly, exactly. It's a good job it's private markets, not public markets, Toby.
exactly right.
Um, Yeah, yeah. That's fantastic to hear. I've always said the one thing that you get here is entrepreneurial empathy. We know the challenges of growing a business, right?
Mm, mm.
And it's no different for us as it is to everybody else. But I haven't got it in front of me, but there was a piece of research came out last week, maybe the week before, that basically said that for the first time, the actual number of active VC firms and versus the number of zombie funds, right? So the number of active VC firms had decreased for the first time in like a decade, and the number of zombie funds had gone up. A zombie fund is a fund that's managing its existing investors but hasn't raised any more capital to invest into to deploy into new deals. So effectively, that's in runoff.
Yeah, yeah.
Right.
I mean,
That's not a healthy place for the business to be in, right? I don't
yeah,
think my
of course.
business. I mean, we've got two active pools of capital that we're deploying. We're just finalizing the final close of our first Series B strategy, Early Growth One.
Mm,
We haven't raised what we wanted for it, but we've got enough to, kind of get started on the strategy. We'll be back in the market with Ventures 4, later this year, right? Yeah, here's the stat, right? Number of unique venture investors participating in deals in the US peaked 25,000 in 2021. This is from AI, though, by the way. So who knows if there's an hallucination,
mm.
right? To roughly
Trust but
11,000
verify.
to roughly 11,400 in 2024, early 25, a 54% reduction in active investing firms compared with peak levels,
Yeah,
right? Right. In
yeah.
Europe, the count of VCs that did at least one deal per year declined 30% from 2022 to 2024, right?
It's a really interesting sort of set of data, isn't it, around where we go and actually what that means. Looking further forward, as I sort of said before, this last 5-6 years has been dominated by extremes on both ends, in one way or another. And obviously, you talked about the bubble of 21, 22, which feels like quite a way away,
Yeah.
or quite a way behind us. But it's interesting to see what with the markets working in cycles as they usually do, and looking ahead, to the years to 2030. It's quite interesting to see where you think with again with no end in sight for volatility on a macro basis, what that actually means and what that looks like, and where you think the sort of future of the space goes.
Look, I mean, like the macro side of it's really, really interesting because you have to look at, natural market volatility, extraneous factors from,
Wheat.
political leadership,
Yeah, yeah.
right? Um, and like it's very, very hard to legislate and invest around those. I mean, I think it's hard to like, I'm a trading background. I'd hate to be trading in a world where, someone can just randomly come on the record and move a market, right?
Mm,
As much as happens today. Um, and then you've got actual macro technology shifts, which is what we're actually all about as well, right?
absolutely.
So, the like pure market volatility we deal with every day, right? Like some of these things are linked, by the way, of course, because there's the whole debate: are we in an AI bubble, right? If Nvidia sneezes, does the whole financial market catch a cold, right?
Mm,
You
mm,
know, like it was a pretty harsh lesson building a VC firm when the sort of the post-COVID kind of collapse happened
mm,
to kind of go, okay, public markets collapse, which means in my mind, venture capital returns are better.
mm.
Hang on a minute, nobody wants to invest in venture capital because they all feel like they're overweight venture capital.
Yeah,
Because if they were 50-50 before and public drops by 50%, now you're two-thirds allocated to private markets. It's like,
yeah, yeah, yeah.
okay, so I can't raise money in a public falling market. Okay, got that. Public markets go up. They're like, oh, well, venture capital returns compared to a liquid market aren't that great. It's like, okay, so
Mm.
I can't raise money in a rising market.
Yeah,
That's a
exactly.
challenge, right? And and we're one of the VCs that have returned capital. So we go meet with investors and we go, but we've returned a lot of capital, right? And they go, that's great, we love it, but we can't allocate because we haven't
Yeah,
had
yeah,
back from anybody else.
yeah,
Like,
yeah, yeah,
okay, right, okay, well, we'll come back on Ventures 4, right, and hopefully, hopefully at that point, we'll get rewarded for what we actually have done because we have
yeah.
a model that works. So managing around like building our business and managing around those macro things are challenging. Obviously, then you've got just what that actually also means for the companies in the portfolio, right? And
Of
so
course, yeah.
like when the world catches a cold as it did in that sort of 2021-22 period, you know, the organizations that are clients are spending less or being more thoughtful or what have you. So growth slows. So that becomes a challenge because the VCs haven't been raising as much. They haven't got as much to deploy. And because the growth has slowed, the
A lot
fundraising
of pressure.
windows get wider, right? So the whole dynamic of how to now manage a private company becomes different because, it's not
Mm,
that, hey, raise for 18 months and raise again in 12. It's like you've got to be able to carry yourself for 2.5, 3 years and move materially towards a more profitable model, unless you are a true power law hyper growth company, right?
mm, mm.
And if you are a true power law hyper growth company, and we all want to find those, right? That's great because again, who knew that the Bible had so much venture capital wisdom in it? To those that have will be given. That's what we're seeing
Yeah,
with
yeah,
the funds. That's what we're seeing with the mega rounds, right?
yeah, yeah, yeah,
Then you go to the political challenge, right? And it's like, okay, you had an administration change in the US, and all of a sudden, that's completely changed the view on digital assets. It brought digital assets massively out of digital asset winter. So crypto winter,
Mm, mm.
right, became crypto spring,
Very
right?
quickly. Yeah,
But by the way, if you're building a US based, sustainability focused business, it's not
yeah,
your time, right?
yeah,
It's not your time. So, with the stroke of, several electoral pens,
yeah,
right, an entire part of an asset class fell out of favor and an entire asset class came back into favor,
yeah.
right?
Absolutely right. Yeah,
And like that is like super challenging. Now, here's the great news, by the way. You know, venture funds outlive administrations,
Yeah.
right? Right. And again, it's not just about the US, it's anywhere, it's anywhere else, right?
Well, you say even in that crypto piece, you saw it with Anderson Horowitz coming over to the UK and then moving back to the States with government changes over here, and obviously the growth of it back over there. I think people are being nimble about where they do things, and
Yeah.
I think I've said it before and I guess it goes to your world as much as everything else. Pivot used to be a very dirty word. Now it seems to be very on trend, doesn't it?
Yeah, but also I think, when you're thinking about investing in private markets, you have to be thinking about two things that are slightly they both need to line up, and they're kind of almost against each other in a way. Like these are 10-year funds. We are investing, for 10-year returns, right? So, it's not about short-term politics, changes in direction, what came out of Davos last week or what
Mm,
have you, right?
mm,
It's like, what are the structural changes that are
mm.
going to drive massive value creation over a decade, right?
Yeah.
That's what we're looking for. That's why 30% of Ventures 2, our 2019 vintage Series A fund, is invested in the institutionalization of digital assets, right?
Mm.
Like that fund, is not setting the world on fire, right? Why is it not setting the world on fire, right? By the way, it's got a lot of potential, but let's be
Yeah.
honest,
Yeah. Absolutely.
right? Why is it not setting the world on fire? Because it was deploying 30% of its capital, towards the top of the market ahead of both venture winter and digital asset winter,
Yeah. Yeah. Yeah.
right?
Yeah. It's a hell
So,
of a double at that, isn't it?
so we've had to weather
Yeah.
probably 5 years
Yeah.
of some of those digital asset investments kind of going, like down and then back up,
Yeah.
right?
Yeah.
But now, because we're taking a 10-year view and we've still got, several years left to run on this, right? It's really an exciting place to be, right?
Yeah.
The valuation of the fund,
Yeah.
it's through the J curve, right? And was for a long time, but but again, it's not setting the world on fire, but the potential energy is there. Right?
Absolutely. Yeah.
The potential energy was always there, right? But we had to weather that, but we had to weather that, that downturn.
Yeah.
And, you know, you can do that because you're taking a long-term view. Now, the trick, of course, is that the other side of that coin is those companies have to be able to survive that downturn, right? You know,
Yes. Of course.
and
Yeah.
so in some cases we're quite fortunate that yes, we might have gone in at high valuation levels, but at the same time, those companies were able to raise large amounts of capital
Yeah.
because they
Absolutely.
didn't have to come back to market in a huge down round environment
Yeah.
to actually kind of get back to the sort of values that that they're at today,
And it
right?
feels like sensible running of those businesses as well. It doesn't feel like this has been thrown, good money after bad and saying, right, we've raised, so let's go through there. It feels like it's being well stewarded in the companies that certainly I've known that you've been around as well.
Yeah, but there's definitely a mindset change, along that way, because in the easy money times of 2021, 2022, that wasn't necessarily the case, right?
Mm. Yeah, true,
Um,
true. I think we all
yeah,
fell foul of that at various stages, didn't we?
correct, right? So the companies need to be able to fund through both kinds of those kind of macro factors, just market vol and political vol, for want of a better expression. Um, and then, of course, you've got the whole fundamental, okay, but what are the actual macro technology changes, right? And or in our case, industry needs,
Yeah.
right? What are the best technologies that sit against those, right? And then so we have the whole, AI boom.
Mm.
Um, and that's a really interesting place and a really interesting challenge as well, right? I mean, we've done AI investments. We're not the sort of people that are going to invest in an LLM, right? We're not
Mm.
going to invest in a 500 million mega round to own basis points of a company at a, zillion-dollar valuation, right? We need to be looking at what the intersection as ever of this technology
Absolutely.
our world is to actually really understand, where is the application layer and the future-proof application layer of those solutions that is going to drive huge value in our market. And
Mm,
actually, it's really interesting because if you draw a parallel to the original blockchain boom of like the late teens, right? When when blockchain came along, all the financial institutions had these blockchain labs. They were all
mm,
investing left, right, and center.
yeah.
A huge amount of that hasn't really achieved very much. We haven't seen the mass transition onto blockchain rails of institutional finance yet,
Absolutely. Yeah.
right?
Yeah. So
That's
yet's an
part of
interesting part of that, isn't it?
Well, that's the key, and that's why I'm so excited about
Yeah.
Fund Two, right?
Yeah.
Because as we see the stable coin pace hotting up, as we see the tokenization of assets and
Yeah.
equities, real world assets coming along, the need for institutional grade rails finally, which is what we've invested in, finally becomes a value creating proposition, and
Mm,
that's mega, that is mega exciting. But
mm,
to draw the AI parallel, like we didn't invest, and I've said this to you before, we didn't invest in a single blockchain company out of Fund One, right? And the
mm,
reason we didn't is because the world wasn't institutionally ready for it.
mm.
Like, by the way, here we are a decade later, and we're just about getting there. Um, but also, a lot of that promise at the time kind of required a big bang of, oh, we're going to take the whole, we're going to take the whole OTC derivative industry and put it on blockchain, and we won't need to reconcile anything. It's never going to happen,
Mm.
right? It might evolve there, but it was never going to happen. AI is completely different. I say all the time, I don't think there's a single financial institution out there that actually fully understands what their full AI footprint is, because they've got so many young people doing their job off the side,
Yeah.
right? And
Yeah. Yeah.
so suddenly realizing, oh, actually there is an AI use case that's being done by an associate on my investment banking desk, or an associate in my trading desk, or an associate in research, or a VP or director or whoever. Then you end up going, okay, now we need a license. So you see all these licenses kind of coming along for for the LLMs. Then you see all these pilots starting for all of these other more application type AI products. I think one of the interesting challenges for us, right, when it came to blockchain, we just had to work out, hey, is a big bang happening inside this fund life cycle, right? And the answer
Mm.
was, I don't think a big bang is happening in terms of blockchain at all. And it definitely wasn't happening in Fund One. And an institutional level, the evolution will start in Fund Two, and that's coming, and that's great. Right? In AI, we have a different challenge, and the AI challenge is company comes in and says, hey, we set ourselves up, we set up 12 months ago, we went live with our product 6 months ago, we've already got $2 million of revenue. Like, that's phenomenal. Is that actually $2 million of sticky,
Yeah.
repeatable, long-term value, lifetime value revenue?
Yeah. Yeah.
Or is that $2 million of pilotitis revenue,
Yeah.
right? And that's actually super hard to pass down.
Yeah.
And so, that's obviously, again, part of the challenge that we're kind of, working through as we decide, where, where those, where those values, where those, where that value sits.
It's a very tricky thing to do, isn't it? As you rightly say, because look, there's so. I think that bit there's the stickiness of technology within that space when it continues to keep evolving. It
Yeah.
feels like a product is very outdated very quickly, and people have to keep on reinventing their products to be market fit for what's happening. I think that, for me, the bit remains that there's obviously a huge appetite for AI and investment into that sort of space. There's a huge appetite for people in institutional finance to buy into AI and to product, improve efficiencies and increase productivity. But it's just about making sure, the bets for you. I have full sympathy about making sure which were the ones there which are built to last, aren't they? In that sort of space. And I think when you go back to what you were talking about digital assets, that was always going to be a long burn. about where it went. I think we know AI is going to be in the future, but where does that go? Mark, I know
Yeah.
you're on a hard stop, and you and I could be talking for hours and hours and hours. So let's look ahead to this year. This will come out sort of March time, so we're already hurtling into Q2 by the time this comes out. Tell me a little bit about some of your quick predictions for what we think we'll see over the course of this year. It's always a challenge, and we'll review it back in 2027, no doubt.
So I think, as I say, the whole evolution of institutional digital assets with, the growth of the ETFs over the last, 18, 24 months, the rise of the stable coins, there's been a lot of action in the execution side of digital assets, not necessarily the institutional execution, but certainly the crypto native execution side. I think we're now going to start to see more activity on the M&A acquisition side in the sort of the infrastructure layer of that, right? I think those companies are going to be looking to add on capabilities and talent and revenue, ahead of their own, their own industry M&A and or IPOs, right? So I think that, over the next 18 to 24 months, maybe not 12, but I think we're going to start to see it over 12. That's definitely coming through. I think, will there be an AI wobble? I think there has to be. I think there definitely has to be. So let's watch out for that and see what the impact of that on our industry is.
Yeah, sure.
I don't see an end in sight to this barbell type distribution of allocation of assets to managers. So I think that's a challenge for everybody in our industry to kind of work out what you are. Are you somebody that can break through to the top ranks, or do you have to manage your firm to a certain level? So I think we'll see a bit more shrinkage there. At some point, I think the distribution of deployment of capital probably needs to broaden back out again.
Yeah, makes
I
sense.
think when we spoke before, I spoke about a return to differentiation, but I never expected this level of differentiation. Because differentiation in perceived quality of company is just driving so much concentration, right? I think the pendulum always swings too far, and I think it has swung too far. And so let's see what comes out of it, right? The bubble of 2021, 2022 in private markets was definitely driven by people just feeling like the market was always going up and deploy. There may be some of that going on in certain sections of the market right now. So we got to watch that, steward our capital carefully, and make sure that we've got genuine long-term value propositions in the portfolio that are going to return value, irrespective of all of those three macro factors, right? So that's the game. See you this time, same time next year.
One last question to put into it for people who are raising in 26. Sorry to just jump this in. If there people are looking to raise in 26, what bit of advice would you give to those companies? People who are looking to be number 54 and 55 in your portfolio.
I think it's good hygiene, right? I think you've got to make sure you've got a cap table that is simple and not broken. So you need to be raising enough to see you through to the next genuine delivery of a metric that is fundable, right? So no fundraising for 18 months, definitely fundraising for 2 to 3 years. Layering convert on top of convert or safe note on top of safe note does not inspire confidence. Demonstrating that your cap table is clean, that the founders and management have the appropriate ownership is absolutely key for for the long game. And I also think being able to demonstrate that you can not only sell your business to your clients, but actually also fundraise from the market, right? Like, I think there's been a lot of too many internal fundraising journeys over the last 4 or 5 years. And it's not just about selling your product, it's also about selling your dream to the next investor.
Yeah, very good. Well, Mark, another exciting year for Illuminate.
Let's hope so. Let's hope so. We'll be back in market with Ventures 4 later this year. We'll be talking next year about how that's going and find out if we're one of the haves or have-nots.
Keep watching the wires.
Yeah.
I'm sure I'm going to go with haves. Always backing you. Thank you so much as always for your time. It's a real pleasure, and I will see you very soon, I hope. Thanks for coming on the show, Mark.
Always a pleasure.
Thank you for watching. We'll
Cheers.
see you on the next episode of FinTech Focus TV. Thanks a lot.